Hi, and shout out to all our new subscribers. Thank you for subscribing to the channel. In this lesson, I'll be sharing with you what to trade and what not to trade. So it is important that you know what to trade in order for you to make your entry precise and selective, and also not what to trade. It is not everything that you see on the chart that you trade. So it is very important that you know, as a trader, you have three types of position. One, either you are in the market, that is, you have a running trade. You are out of the market, or you are making an entry. So these are the three positions. So being out of the market is also a position. And what will help you to determine all of this is your ability to know what to trade and what not to trade. So first thing I want you to know is, do not trade a reversal. If you don't know what you are doing as a beginner, avoid taking reversal trade. And what is the essence of what I'm talking about? You must know when price is moving in an uptrend. Do not anticipate for a reversal. Look for a continuation trade. So do not trade reversal, trade continuation trade. Do not trade overbought and oversold. Always look for a continuation. Now, if you focus on continuation of that market direction, you will end up being a very big time profitable trader. For instance, GBP USD has been buying for a couple of times, just as you can see. So imagine you begin to anticipate that this price has been buying, enough is enough, let the price begin to sell. You keep making series of entries and you see that price has been buying for days, for weeks. So avoid what? Avoid anticipating reversal. So your focus henceforth, in order to make your entry precise and to make your entry accurate, your focus should be on a continuation trade. Continuation trade. So avoid taking reversal, and this will make your entry precise. The most difficult trade entry to make is a reversal trade. So focus on continuation trade. Allow the institution to do their movement and then you follow it. Secondly, avoid ranging market. Anytime you see the market ranging is area of manipulation. So you must avoid anything that has to do with a ranging market. Allow the market to give you a clear and precise market direction. Then you ride with the order flow of the market in the direction of that trend. And then focus on candlestick continuation pattern, such as engulfing candles and pin bar. Focus on engulfing candlesticks and a pin bar candlestick. So those are continuation candlestick pattern that you need to focus on. And then focus on the chart pattern, the bullish chart pattern, and the bullish flag and the bearish flag pattern. These are what you should focus on trading. Okay, so how do you now go about trading this continuation trade? Since we said focus on a continuation trade, and that is why we have this our indicator set up in order to guide you. You have the Bollinger Band, the period is 130, deviation is 2.0, shift applied to close. Okay, then you have our moving average. Exponential period is 25, method is exponential, you apply to close. And then you have moving average 10, period is 10, method exponential, you apply it to close. So these are the indicators that we use. Then when you open up your chart, just as mine like this, all you need to do is mark out your area of support and resistance. Okay, area of supply and demand. Just as you see now, I have marked out this my area of resistance. If you look down, you can see here is my area of support. You can see the movement of price from this zone to this particular zone. I've explained this in our previous video on what you look out for in the zone that you marked. You want to see the zone where there are institutional movement. Having done that, identify the trend and do that by connecting your trend line. And to connect your trend line, remember you always need point A, which is this, and a point B. Okay, so in a downtrend you will need a lower high and another lower high in order for you to connect your trend line. Even if you did not connect the lower low together, the most important structural point of a downtrend is the lower high, because if this price want to break, it has to break out this zone. Once you have marked it, you move to your H1 time frame. So you'll be making your entries on a H1 time frame. So here we are on our H1 time frame. Just as you can see, this is our H1 time frame. So presently, price is at this zone. Okay, so what do we look out for in making our entry? Now that price is at this zone, if you look at this particular price reaction, this is our moving average. So when price is at this zone, how do we find our continuation trade? For us to have a buy entry, we want to see our moving average moving below our price. This is the price, our moving average is below it, and we are looking for a 2 o'clock trade for a buy. So we want to see an engulfing candlestick or a pin bar candlestick. So just like here, this is not a confirmed pin bar, but for illustration purpose, I'll spot this and I am seeing this as a continuation. So I will pick up my trend line. I've seen a market reverse to some extent in this zone. So I'll pick up my trend line, mark this, and I'll be making my buy entry. That is my entry, my stop loss. This is the bearish candle I am looking at. I am looking at this particular bearish candle. So I will set my stop loss about 10 pips below that candle. And that is it. I've made my trade, and my next target, I know that this zone now on my H4, this particular zone is going to be my area of resistance. You can see that price move from here. So what do? I will mark out this my resistance zone. So as price begin to approach that zone, I know I will close, I will take profit from this zone. Now I am not making this entry on H4, but look at how effective this our candle is from those area of our zone, those area of our price reaction. So if I see price, once price take off from this point, now you can see this pin bar. Once price take off from here, See those pin bar? What do I do? Price now. I made this entry based on this. Here is my trend line. Price just took off from my area of support, and immediately price took off from this support, which is my lower Bollinger Band. I'll mark it with my trend line. Come to my H1 time frame. Price has taken off from here. So this is my reference line. Simple. This is how I will hold on to my trade. This is my reference line. I've drawn my reference line. I made this entry based on these rejections. Price move. It always move from area of demand supply. It will move from that zone like that. This is where the price start from. Now I did not struggle with all of this reversal. What I did was to make a continuation entry. Okay, and now we are in this move. So this is how simple you can take advantage of this. If we were here when this happened, immediately we spot price around this zone, we'll go to our lower time frame and then we spot it. All you need to do is you connect your trend line. Simple. Price is going down. I'll move to my H1 time frame. You can see it here. Look at that pin bar there. Beautiful pin bar that gave us that entry from that zone. So if I had missed this, I'll be looking for an engulfing candle to give me an entry. So either I would have made an entry here, or look at this candle. This would have been my entry on a H1, and you see price move to the downside. So in the subsequent video, I'll be sharing how you can use your bullish and bearish flag pattern to find a continuation trade. We are looking for just continuation. Okay, so this is how this thing works, and this is how you can take advantage of this in making your trade entry.